All the financial gurus out there, they all talk about what to do with your money. You should invest it in this financial instrument. You should invest it in this financial product, whatever that may be. Nobody's talking about getting capitalized.
And when it comes down to when they're in the retirement years, at least they're going to have now steady income coming in for the rest of their lives that they can do, as well as still leave a death benefit for their kids. So for me, it was just a game-changing type thing. And one of those things that an aha moment went off, very similar to what I had with real estate investment. And for all the listeners, it's, don't be afraid to fund that asset, because you need to fund that asset to get the fruit of the rewards later on. Thanks everybody for joining us. If you're seeing this recorded, then you have myself, Jayson, Lowe, and Peter Lount. They're from Ascendant Financial. And we're here today to talk about the infinite banking concept. And this is a concept, much like real estate, it takes a while to learn and to understand, to grasp. It took me a while. I just finished policies for both myself as well as all of my kids. And, just speaking anecdotally for myself, it's one of those things that I put it right up there with real estate investment in terms of an ultimate, not just wealth builder, but one of those things we talk about internally in brokerage is generational wealth. And how can you utilize something within your own lifetime, as well as leave something there and pass it on to your kids. And, a lot of time with life insurance, it's talked about that death benefit. And, I'm experienced one, the death benefit is just gravy on top. It's just the addition you're going to get, but utilizing that asset in your own lifetime is kind of what we're here today to talk about. Now, how can you actually utilize it today, as well as leave something for your kids? So without further ado, I'll leave it to the experts and I'll pass it off to Jayson and Peter.
Right. Thank you so much, Martin. And we really appreciate the opportunity for us to, obviously the experience we've had with yourself, but the opportunity to share the message with your team. And I think it aligns to your team as well as your clients. I'll take you back to when I found the process back in 2017. I was really deep into my real estate investing journey. And I think in terms of being a real estate investor, they're always looking for better ways of doing things, right? They're not stuck on one specific way. This is why I think it's such a great fit for me. I had an insatiable appetite to learn. And I think this is kind of where this helped me. And it's not a replacement to what you do. It's in addition to what you do. And just to make things easier, to your point, Martin, down the future, but also to give you a lot of that breathing room now. Use it as a living benefit as well. And through that process, my education, all that is how I found Jayson. I'd heard it on a podcast in the US and wanted to understand more, did all my research in terms of who did this in Canada, having found Jayson and his team, he's by far the preeminent source of infinite banking concept in Canada, if not North America. He was a disciple of the late Nelson Nash, who founded the concept itself, the infinite banking concept. And, I'd say Jayson is the one who really lives truest to the example. And the book, we both have it behind us here, Become Your Own Banker, is really the source. And that's, there's a lot of other people who have tried to, recreate it, but there's nothing that gets more to the essence of it than Nelson's book. And today we're going to do an interview style just to talk specifically how this can relate to, the real estate investor. And, so without further ado, I should just get back to Jayson. So welcome, Jayson.
Oh, thank you. Thank you, Martin. I want to thank, of course, your entire team, and of course to my colleague and dear friend Peter, who was gracious enough to join me today as well and participate in this interview style discussion. I find that especially when communicating with real estate investors, with realtor groups such as yours, the conversation, the element of capital, the element of access to capital to either improve or to expand your real estate investment activity, we're very focused in that area of finance. I want to grow my portfolio of real estate, or I'm just getting started, or I'm hitting my stride. But not one has ever said to me, gosh, I really don't have any more need or to require access to capital. That's what makes this whole thing go. And I also haven't met one who doesn't have a story to share with me about running into some form of hassle, frustration, as it relates to getting access to capital. You know, you've got to deal with lengthy, nosy credit applications. You've got to deal with a loan officer, someone at the bank who you might have a relationship with, a mortgage broker. There's paperwork, there's tons of information that you have to provide to get ready access to the financing. And you want to be able to take advantage of opportunities that track you down quickly. You don't want it to take an extended period of time. And so where this process of becoming your own banker, the infinite banking concept, comes into play is to provide that real estate investor, to provide the realtor who's dealing with that real estate investment community a tool, and more importantly, a process. And that tool is dividend paying participating whole life insurance. Now, when most people hear the words life insurance, they immediately think of, I can only benefit, I'm only going to win if death occurs. And the industry's done a terrible job of explaining all of the living benefits, in particular, the daily cash accumulation that occurs inside of these insurance contracts. And I'll give you a prime example. When I got started in my own real estate investment journey, I became a member of the Real Estate Investor Network. I was a member from 1999 through 2007. I accumulated 13 properties in my real estate investment portfolio. I tended to focus, my niche was on condo style townhomes. That was just an area that I enjoyed investing in. And I participated through the form of rental pools. And so I didn't have all of the headaches, I guess, if you will, that maybe a typical real estate investor might have to endure or go through. But the one thing that I knew I needed access to every single time I wanted to grow my portfolio was capital. And so I've been through all of the frustration of accessing it. Now, when I began this process of becoming your own banker, the infinite banking concept in my own life, back in April of 2008, so I'm aging myself just a tad here, back in April of 2008, you could still get 40-year amortizations on mortgages. And without a thorough understanding of this concept or this process, I thought, hey, this is great. I get a very long amortization period, an amazing rate of interest, the payment is low, and this was on my principal residence. And so I thought, this is pretty good. Had no problem qualifying. But when I began to implement this process in my own life, I started by creating the tool. So I had to have the dividend paying participating whole life insurance contracts in place. They began accumulating cash on a daily basis, which are still growing and accumulating to this day. What would be helpful for your audience to know is that that accumulation is not tied to the performance of a stock market, to any particular real estate cycle, to the economy. That cash value is contractually guaranteed to accumulate on a daily basis. So think of an aquarium filling up with water, except in this case, it's money. And what I began to do is I began to borrow against that accumulating value. So I had ready access to capital on demand and on my terms. I say that again, ready access to capital on demand and on my terms, meaning when I need access to capital, I borrow that capital directly from the life insurance company, and there's no repayment schedule. The insurance company cannot dictate the repayment schedule of the capital that I've borrowed. So I'm in a position of total and absolute control. And what I began to do was access policy loans and take the insurance company's money. So my aquarium is still filling up with money every single day, if you can just close your eyes and picture that. And I was taking the insurance company's money, heading down to the bank and saying, listen, I need you to apply this amount directly to the principal balance of my mortgage. So the bank was happy to do that. I would get an amortization schedule rerun at the branch, and I would see my amortization schedule shrinking and shrinking and shrinking, but my monthly mortgage payments stayed the same because I was still within the term of the mortgage. And so every payment that I was making became instantly more valuable to me and to my family because more of that money was going toward principal and less was going toward interest. Now, to make a long story short, it took me 7 years to get rid of the bank. 7 years. So I think it's a pretty good accomplishment to get rid of the bank 33 years ahead of schedule. And the first person that I called was my mentor, the late R. Nelson Nash, who pioneered this process. And I said, Nelson, you're not going to believe this. We achieved it. We got rid of the snakes and dragons. The bank is gone. And he said, don't celebrate too quickly. You signed on to a 40-year amortization schedule. You've taken over the financing function as it relates to your principal residence. You've got to be an honest banker, and you need to finish the original loan schedule that you committed to. The difference now is you're changing the process of who's getting the money every month. So now that money's flowing back to our family versus flowing away. We've since moved into another home. We lease that property, and we control every aspect as it relates to the financing function in our lives. We don't rely upon a commercial bank for anything other than the convenience of debit. Isn't that good?
Great. So let's break that down to layman's terms, I guess, for people that are never heard of life insurance before, never heard of becoming your own banker. And, I'll try to paraphrase it. And kind of what you're saying is you need to build up, let's say it's a dividend paying life insurance. You're investing money for a number of years into that. As that builds up, it's contractually obligated to build up. You have access to a portion of that you can now borrow against. Right. Now, for you borrowing against that, how hard is it for you to borrow? How much credit application do you need to go to? Do you need to go through a rigorous process to get access to that capital within your life insurance policy? Well,
I'll explain to you just how difficult it is. It's either a phone call or a single piece of paper that is a loan request. And that capital that's provided to me by the life insurance company is either directly deposited into my checking account or it arrives via Canada Post in the form of a check. That's
how first in line. You don't have to give credit statements to deposit checks from your bank or anything like that. It's an automatic loan that you get from your life insurance.
You got it. So if you envision, you've got a life insurance contract, because that's what the tool is that enables you to implement the process. Now, a life insurance contract of this nature, which is a dividend paying participating whole life insurance contract, has an instant estate value. So it does have a death benefit from inception. Now, if you're an avid real estate investor, I'll bet that you owe a lot of money. And heaven forbid, if the unthinkable happened to you, there's no disadvantage to your joint venture partners, to your family, to whomever it needs to carry on after your death. There's no disadvantage to a large tax-free windfall showing up exactly when it's needed the most. Because here's one of the things that I run into literally on a daily basis when I'm speaking to real estate investors. Where there's a joint venture partner involved, there's confusion as to joint and several liability on the debt. Oh, well, we both went into the property together. Well, yeah, God forbid, if you passed away, the surviving JV partner is jointly and severally liable for 100% of that debt. And if there's a due on sale clause in that mortgage contract, you think the bank's going to be just a little or a lot concerned that one of the parties to the agreement is no longer alive?
So you have to manage the risk.
You got it. And so having this large tax-free windfall that shows up exactly when it's needed the most, because I've got absolute certainty that everyone on this call, everyone who's going to listen or watch this presentation is going to die someday. That's inevitable. And so nobody has a lease on life, nobody that I've met. And while you're alive, you've got ready access to capital. Real estate investors want ready access to capital so they can take advantage of opportunity that tracks them down. Now, if you can do this for real estate, you can do this for other property, business expansion, business acquisition, your personal financial overhead, automobile loans, appliances, home renovations, investment property renovations, your property fund, your maintenance fund, your vacancy fund, whatever that may be. The truth is that your capital has to reside somewhere. And so if you're storing capital inside of an instrument that can only increase in value every single day, regardless of what's going on in the economy, the stock market, the real estate market. That contractual value is growing on a daily basis, and there's no encroachment by the government. So you're not worried about, hey, what happens if tax rates go up to 80%, or what happens if, the government decides to change the rules as it relates to RRSPs and maybe other investments that you may have. This gives you total and absolute control. And you've got to put capital in. You've got to capitalize it. So when you put capital in, that whole process that I've just described begins immediately. And part of our process when we're sitting down and connecting with someone, and Martin, you can attest to this, you've been through this process firsthand, is that we want to get crystal clear on what specific financial objectives you're trying to achieve by utilizing the tool. And then we coach you on all the advantages of implementing the process, because those are two completely different things. The insurance contract itself is just a product. And if we put the best product to get the job done in the hands of someone who doesn't know how to use it, not only are they not going to turn out any good work with the product, they're likely going to break the product. And so that's why on our team, through our client coaching, through our client success leaders in our group and our coaches themselves, we're all here to support you on that journey and to coach you through it. When I first got started, my first policy was back in July of 2008. And we now have 61 policies in our family banking system. So we refer to this as our family banking system. So there are no outside loans. When people need access to cars, property, renos, consolidation of debt, et cetera, within our family, they're borrowing the capital from the family banking system, and they're repaying the family banking system so that the money can be utilized again and again and again. The alternative is to transfer it away.
Right. And that's a very important point that really struck home for me, is that not just having access to capital. We can get access to capital. A lot of our listeners have access to capital. They have very favorable lending terms that they can do.
Yeah.
But for me to borrow from my own life insurance policy, what's the benefit for me? And it's my own life insurance policy. Why should I even pay interest back into that policy in the first place? So let's answer that question.
Yeah.
And, I have basically this option to bank. The bank's still lending me money, not me personally, but like someone in this situation, they still have a great full-time job. Why borrow from your life insurance rather than the bank? And how does the interest that you pay, what's the benefit of doing it one way versus the other?
That's such a good question and frequently asked. So when you become a policy owner, the only way to do that is to purchase a policy. So that's what puts you in a co-ownership position of the life insurance company itself. So you're creating a business from scratch that never existed before. You become a co-owner of the life insurance company. You participate in the divisible profit generated from the life insurance company in the form of dividends. Now, when anybody hears the word dividend, especially those with an investment mindset, they think, oh boy, here comes Revenue Canada. And when we chunk those dividends back into the policy, we're not triggering a taxable event. We're getting the investment return without the investment taxes. Does that make sense? And so we've got this tool. It's growing every single day. You're a co-owner of the company that issued the tool to you. When you need access to capital, you have a choice. You can borrow the capital from the business that you co-own, or you can borrow it from a competitor. So Martin, if you and I co-owned a Loblaws grocery store together, we would never buy our food from Safeway. We would always want to do business with our own grocery store. Right. So the advantage of paying interest, to get to your question, is that regardless of the rate, so one fatal error as it relates to this process of becoming your own banker is thinking that it's a function of interest rates. It's all a matter of where the money is flowing to and who that money is being put to work for. And more importantly, when you get to access everything that you repay plus more, then the rate discussion doesn't impact you the way that it would someone who doesn't co-own the entity that they're borrowing from.
It becomes a moot point. The rate becomes
exactly
a moot point because you're actually putting it back into yourself.
Well, you're putting it back into the pool of the company that you co-own.
Right.
Now, what is that company? And this is a question I invite both you gentlemen to participate here. So think about this. When that money goes back into the pool of the company that we co-own, what is the company that we co-own going to do with that money?
Loan it out.
They got to multiply it.
Yeah.
And that could be by loaning it out. It could be by investing it in instruments that have a guaranteed repayment schedule. I say that again, a guaranteed repayment schedule. And so the more capital we put into that pool of the business that we co-own, the more capital our business has to multiply. For whose benefit?
For that business.
For all the owners of the company. And when you're dealing with a mutual life carrier, there are no stockholders. The dividend paying participating whole life policy holders are the sole beneficiaries of all the divisible profit generated, all the owner's equity, all the return on the owner's equity, and so much more. For me, the simplicity of I put money in, I get contractual guarantees. I know that if I live a long time, I'm going to be a hero to my family and to my business partners. And heaven forbid, if I die early, I'll still be a hero to my family and to my business partners. And I've got ready access to a growing pool of financial value. All the financial gurus out there, they all talk about what to do with your money. You should invest it in this financial instrument. You should invest it in this financial product, whatever that may be. Nobody's talking about getting capitalized, right? Because people ignore the banking function. In fact, they abdicate that responsibility to someone else. And if I was talking a little bit earlier, I'll just share this with you guys. The industry goes on this tirade about you should save 10% of your income. That's what the financial entertainers talk about out there. Take 10% of your income and save it. But nobody sat down with that person and said, isn't it true that at present, all of your income is flowing through the books of someone else's bank? Regardless of the source of the income, rental income, T4, dividends, interest, doesn't matter. It's all flowing through the books of someone else's bank. And someone must perform that banking function as it relates to your needs. It can be you. And in fact, it should be you. And so taking control of this banking function is not just limited to your real estate investment pursuits. It is expanded to every financial aspect of your life. And being 13 years into my own journey with this process, I can attest firsthand that it creates a very peaceful, stress-free way of life when you do not have to rely upon bankers for anything other than the convenience of debit. Isn't that good?
Yeah. So when we do, and if I look at the whole concept in totality, access to capital, check. I'm paying interest back to myself, which is essentially that business, which is growing the value of that business and growing your access to capital. Check. All that is great. The one piece that stumbles a lot of people is participating in whole life insurance. That comes at a hefty price, and that comes with sometimes a large premium. So let's talk about that in terms of the premium they have to put in, but understanding that premium you're putting in is capitalizing a business, and any business needs capital. And that's the hard part, because a lot of people go, hey, I want access to this capital. This is great, but this is the work you need to do for the years up front to be able to do that.
Definitely. There's a crank up cost to any new business, regardless of what that is. And your capital has to reside somewhere. And so if you're in a position where you're spending less than what you earn, you've got money left over, it is presently residing somewhere. And you get to determine for yourself, what is the comfortable and affordable starting point for yourself in the way of the amount of capital, the premium that you're choosing to deposit into your policy or your system of policies, like yourself, Martin, when you just got started with yourself and your kids, et cetera. You've created a system. And from that very place, you're going to be able to implement the process. So you get to decide what is a comfortable and affordable starting place for yourself. And there wouldn't be any advisor on our team that would be trying to influence, that amount or try to get you to stretch beyond, what your financial capacity, would be to get started. The key is to get started, because the longer you wait, the more you penalize yourself. Think about and Peter, this is something that you can relate to. We talked about this long time ago. Think about all the money that you've spent up to this point in your lifetime. Think about all the things that you've spent that money on. Home insurance, car insurance, groceries, utilities, property tax, automobiles, education, weddings, renos, appliances. The list goes on and on and on. Regardless of how you purchased those things, every method, financing it, leasing it, charging the credit card, saving up cash and paying cash, every single method involved a permanent transfer of that money away from you. I always ask folks, just for trivia, could you write me a check for that amount of money that you've spent up to this point in your lifetime? And the answer is no, because you did all the work to earn the money to go buy all those things, and everyone else got all your money. If you to access a policy loan from the life insurance company, you've got $100,000 that's built up in cash value. You can borrow against 90% of that accumulating value on demand. So you take out a policy loan for $90,000. You go and take advantage of that amazing real estate investment opportunity. Tomorrow, you've got more cash value inside of your policy because no money left the policy. So not only did you get to take advantage of the opportunity that tracked you down on demand and in a real hurry, but you've got your entire aquarium of capital growing uninterrupted, and the repayment schedule is up to you. So if you have unplanned vacancy, unplanned maintenance or cash calls, you don't have anybody from any of the banks calling you going, what's going on? We need a payment here. And the life insurance company is certainly not calling you to say, why aren't you repaying that policy loan? And the reason is that the insurance company places a lien on the death benefit of the insurance policy for the loan balance. And the insurance company itself guarantees the collateral for the loan. So they know that there's no risk of default. And so they cannot dictate a repayment schedule because you co-own the company. The insurance company
essentially becomes collateral. So if nothing happens, everyone's taken care of.
You got it. And no other co-owner is financially disadvantaged as a result. In fact, policy loans are an invested asset on the balance sheet of the insurance company that we all co-own. And so we want
interest to pay that interest. You want
precisely
to rather than not do it. And that's why people get hung up on that.
Yeah.
And the way I look at real estate and life insurance is equal. It took me a while to get on the life insurance bandwagon. And I look at it as they're both in essence an asset. And they're an asset that you can utilize. And you have to fund and build that asset to build. For us, real estate investors, we're happy to go and take a huge line of credit out and put it into that home. But when it comes to life insurance, we're a little bit gun shy because we focus on the end benefit, which is what happens at death. And I'm looking at it now in a completely different light in terms of I set up policies for myself and I set up policies for my kids, not for death and what they can bring on afterwards. That's going to happen, no question. But what can I do within that in their own life? And exactly what you're saying is once my kids are young, I got 3 kids. Once they get into university, this is stronger than any RESP that I've seen. They could just borrow from that to get a car, to pay off school loans, anything like that. Rather do that for themselves. And then as that policy builds and builds and builds, and you take now you're talking 1 decade, 2 decades, 3 decades.
Yeah.
They use this as retirement payment. If they don't have a good CPP or old age security, who knows what's going to happen to that in 20 years from now. But they have this policy that I started out. It's not a very large policy for them. It actually was one straight from the Become Your Own Banker book. I basically implemented that exact one for each of my kids. And when it comes down to when they're in the retirement years, at least they're going to have now steady income coming in for the rest of their lives that they can do, as well as still leave a death benefit for their kids. So for me, it was just a game-changing type thing. And one of those things that an aha moment went off, very similar to what I had with real estate investment. And for all the listeners, it's, don't be afraid to fund that asset, because you need to fund that asset to get the fruit of the rewards later on.
Absolutely. And thank you for sharing all those good points, because if we really look at this from a bit of a different vantage point, where if there's a downer in the real estate market, right? Because real estate goes through a predictable cycle.
Yes.
And when there's a downer, all of your cash values in the policies are still rising, uninterrupted. When the stock market gets temperamental and that volatility kicks in, your cash values in your policies are still rising on a daily basis, uninterrupted. And so, like Peter said earlier, this is not an either or. It's not, hey, I should invest in real estate or I should become my own banker. It's an as well as, because if you're looking to improve or to expand your wealth, if you're just getting started in your real estate investment journey, the earlier you get started taking control of the financing function as it relates to the things that you're investing in, the better. And R. Nelson Nash, he said it best. He said, becoming your own banker is not about addressing the yield of an investment. It's all about how you go about financing the things that you need in life, which can certainly include investment. And so this just amplifies and strengthens whatever it is that you're already doing financially or that you're contemplating doing financially. And I haven't, and Peter, in your experience now in your journey in this profession, I don't think we've ever had an existing client who's a participating policy owner ever contact us to say, I'm really frustrated that my cash values keep rising every day and that I have ready access to capital on demand. It's really bothering me.
So it's true. And you don't have that. When people get started in real estate, there's those fears. What if there's a market correction? What if all this goes down? And with their life insurance policy, once people get those check marks of, hey, I have access to capital, I know exactly what's going to happen with the money, it's always going to go up in value. That's contractually obligated. It's hard to kind of turn that aha moment off, but it's hard to get them to take action to it, to actually do it. And that's why for all the listeners, it starts with not, hey, I'm converted, I'm going to buy a life insurance policy tomorrow. It's let's plant that seed and let's learn a little bit more about it. So
definitely
for any of the agents listening, feel free to get in touch with me and I will personally get you one of these books. And it was a game changer for myself in terms of becoming your own banker. For our brokerage, I think it's extremely important. But for you guys, what, if this is great, it's been a great discussion. What would be the next step for someone in terms of if they want to, learn a little bit more about this?
Well, two things. So one, we would encourage folks, I believe that we've got a text the word legacies too, that Peter can bring up here in just a moment. But before we do that, we're also going to provide anyone who's interested, we'll provide you with the electronic version of the book that Caleb Williams and I co-authored together. And so that'll be our gift, our token of gratitude for anybody who's tuning in and listening and wants to learn more. Recognizing this is just one book that will help you to rethink your thinking. But where it all began was with the book that R. Nelson Nash authored, Becoming Your Own Banker. This book has sold more than 470,000 copies. There's a reason why. It works. And so make sure that you get your hands on a copy of this book. We can include a link directly to our store if people want to go and pick up a copy. We courier it right to your front door, like wherever you want it to go. And this book will change your life. I promise you. This is where it all began for me.
Peter sent me a copy of that book and I wasn't even expecting it in the mail. I already thought, hey, life insurance is great. I want to do it. And I was like, I guess my knowledge was like a kindergarten kid. And I got that book and it came out with a good high school education on it. It was a game-changing book for sure. Peter, thank you for sending it over to me because it opened my eyes up to a lot of things that I knew there was value there, but I really didn't know how much value there actually was.
Yeah, it's Peter is very generous, and he's done that for some time now, where he just says, "Hey, reach out to me. let me get a copy of the book in your hands. And, there's got to be a commitment on your part, a desire to want to know more about this process. And we have a few other resources that I just want to bring up for folks here. But before I do that, Peter, I've got let me just go ahead and share this. People text the word Legacies to 647-905-6366. Again, that's texting the word Legacies, plural, to 647-905-6366. Just arrange a time to connect with Peter, chat with him, talk about the process. You'll get an electronic copy of the end asset for Canadians. And in addition to that, if folks were to ease on over to the YouTubes, if you like YouTubes, there's a couple of channels of ours that have just an incredible vast resource of content. The first one is titled Banker's Vault. Again, that channel is titled Banker's Vault. And when you get there, this very first video that you see here is an overview of the process with supporting examples. You can watch it 24/7. There's an ever expanding playlist. We add about 5 new videos a week that will teach you everything about the process of becoming your own banker, the infinite banking concept. And then the second YouTube channel is Wealth Without Bay Street. Wealth Without Bay Street is the podcast that's hosted by my colleague, Richard Canfield, and I. And we upload new episodes every week. So all of our show episodes are all archived right here on the YouTube channel. So there's no shortage of content for people. It's ungated, right? So we don't need names, email addresses, etc. Just hop on, go through it at your convenience, and then take that next step and connect with Peter. Have that conversation. Talk about how this can be an advantage for you, your family, your business. And then if we establish a basis to work together, then we walk you through exactly what, as Martin, you can attest, you've been through the process firsthand. We walk you through exactly what the next steps are. We're right there with you every step of the way. And there is never 1 ounce of pressure from anybody to do anything. You either want to do this or you don't. And if you don't, as long as you leave happy, that's okay too.
I can fully attest to that. It's you guys took me in, and it was basically held my hand through the entire process. From my first talk with Peter, working with yourself, as well as mine was a little bit different because mine involved corporations and whatnot. But you held my hand throughout the entire thing, and it was a seamless process that I'm looking at it now, going, yeah, I'm extremely happy with what I have with real estate, as well as the legacy that I can leave with life insurance, but also have the ability to utilize that life insurance in my lifetime. So it was for sure a game changer for me. So thank you.
Thank you, Martin. And, I honestly say this isn't a platitude. It's the absolute honest to goodness truth that all the credit goes to my team. And on our website, if people visit ascendantfinancial.ca, again, that's ascendantfinancial.ca. And on the homepage, if you just click on Meet Our Team, you will see all of the folks, all of our teammates that we bring to bear and all of their strengths and unique ability. We have an amazing advisory team. We also have our client services group are awesome and take amazing care of all the in-service requests and assistance that we provide to our clients every single day. Our operations team, who of course, enable the rest of what we do to happen, and our strategic partners and strategic assistants as well. So we have trust and estate planner, certified financial planner, chartered accountants at the ready to help with some of the more complex structures like we dealt with yourself, Martin, and your family. And so all of these folks are part of a team, and we are all accountable only to you. And I have to give credit to my group. They are just phenomenal. In the shop.
No, I was just going to say that, same thing. I've been tested that too with my policy. Your team reached out to my personal accountant just to make sure that was all going to be okay with how my corporate structure was set up, how it's going to be set up for my family, my legacy that I'm building with my corporations. You guys handled that for me to know that, hey, this life insurance policy is not going to impede on that, but actually be a benefit to my corporate structure.
You got it. And it's always best, we find, when we're dealing with chartered accountants or other trust and estate planners, it's always best to have one chartered accountant talking to another. And so Frank on our team, or Tim on our team, Henry, who's also a CPA, they're more than accessible to be able to have those conversations, because we want to make sure that everyone who's advising you is well aware of these additional components to your planning and how they support it and how they create additional advantage. And so just wanted to point out too, real quick, for folks who are looking for additional reading material, we've got an extensive library, but make sure that you add at minimum to your library our Nelson Nash's book titled Becoming Your Own Banker. That is the definitive resource of all resources on this amazing process. Peter?
Yeah, no, that's great. And I think just going through the process myself and understanding from a real estate investor, I think, Martin, you touched on this as well, as, it puts you in ultimate control, right? And, when we talked about all the erosion of money versus a savings account, you spend that money, it's gone. This is something that's growing pool of wealth that will last forever. But at the end of the day too, it keeps CRA out of your books, and it's all on the up and up too, right? And as you build these real estate portfolios, you're creating bigger tax problems for someone else to deal with. And in this case, you control that destiny, right? You decide where that legacy is going to lie. Is it to your family, or is CRA going to make that decision? The only other point I was going to make was just the call with me. So yeah, if you can go back to that slide, maybe Jayson, just text Legacies to 647-905-6366, be a discovery call with myself. We just go through and get an understanding of where you are from a learning perspective. Jayson has really built this, built Ascendant Financial about coaching people, right? And understanding and enabling. It's about enablement, but we'll put in as much time as you're willing to put in. So I want to get an understanding of where you are from a learning perspective. And I can recommend some of those videos, perhaps on some of those channels that make sense, or other resources that make sense as well. And then also understand what your objectives are and align you with the appropriate teammate within the group that Jayson would have showed you on the website as well. So and I'm local to GTA. I live off the Danforth, so I'm happy, Martin. I think I'll be coming down to some of your events in the near future as well, so we can definitely talk about that. And happy to be a presence to this, and look forward to continue working with your folks.
Great. I appreciate that from both of you. Thank you, Peter. And for any of our agents that are looking on this later on, you don't have that number, feel free to reach out to me and I can connect you to Peter as well, so you can have that introductory call. And I can assure you it's well worth it. It was for me. And guys, for myself, if there's anything else on this subject, the floor is still yours. But I just want to say thank you for opening it up to me and giving us this forum to open up with our agents as well within our brokerage.
Oh, thank you. Thank you again so much. It's always a pleasure, to be invited to speak and to share this message, because it really does work. It works extremely well. And, the discussions we're having as of late, people are just concerned. They know that there's something fundamentally wrong, with the financial system out there. They just can't quite put their finger on it. And this really puts you in the driver's seat, because we do truly believe that, financial control, as it relates to everything we've talked about, that control should be in your hands. It shouldn't be in the hands of the bankers or the government or, any temperamental stock market. Control should be in your hands. And so recognizing that you're going to need the use of money for the rest of your lifetime and that it has to flow, what better place to have it come from than a system that you own, that you control? And it's not an overnight deal. It's meant to be done incrementally over a period of time. No different than when you invested in real estate. You invest in real estate for a deferred benefit. And as it relates to taking control of this function, this banking function, ask yourself this question: who is the banker in your life today? It should be you. And this process will empower you and enable you to do that. So thanks again. It was a real pleasure. Really enjoyed it.
To all of our agents, we're called KW Legacies for a reason. And when Sandy started the brokerage, it was basically legacies, and we threw around this term about building generational wealth. And building generational wealth is not just a a one-off shot that you can do. It's a lot of these puzzle pieces that come into play to do it. And I know for myself, I would love to get on a path of having every one of our agents own at least one rental property, and the reciprocal, having them set up for not just their own family, but generationally for their kids as well. And this is one of those tools that we want to get involved with the brokerage. So it's not just about selling homes and getting people in their own primary residence, but also building up our brokerage and letting them live their lives to their own terms, basically.
Very well said. Thank you so much.
Well, thank you both, and I look forward to working with you, myself, and as well as our brokerage.
Sounds good.
Great, thanks, guys.
All right. Thanks, guys. Have a great day.